In partnership with kōura KiwiSaver, the Everyday Investor is proud to present News of the Money World, an informative, informal, yet hopefully entertaining look into all the latest happenings in the wonderful yet overly complicated world of finance. Catch us live every Tuesday on pretty much all the socials. Just search for News in the Money World and tune in at 7:30 p.m. sharp. Contribute to the discussion, ask a question, take a look at the world through the eyes of the markets. As usual, all content is provided on the basis of listener beware. Our views are often our own and definitely shouldn't be relied on for any investment decision. Let's get started. Welcome to News of the Money World. Rupert, how are you today, sir?
I am very well. How are you, Darcy? How's sunny Auckland?
Sunny Auckland is fantastic so long as you have the curtains drawn. It's just amazing inside.
Those bright podcast lights will keep you going. Well,
Yeah, totally.
I'm school holidays, so I'm down in Masterton, and actually, you know what? I think the weather for the last 2 weeks, global warming's doing a great job down here. It's better weather and warmer than Auckland at the moment.
Yeah, that's great, isn't it? It's great.
It is.
Well, maybe we'll get like the inverse the inverse summer that we should have had in the summer, but we're probably going to have in the winter. Maybe it gets really warm this winter. I kind of hope so, right? Because it still seems like nothing in the garden is growing. The grass is completely wet. There's mushrooms growing everywhere, including inside one of our vehicles. It's good times. And winter hasn't even
It's
started.
so the normal world is being upended. So which is basically exactly what we're going to talk about today in crypto and regulation, where all the
Beautiful.
rules are being defined and completely changed every day. Do you like
There
that
we go.
segue?
I love that segue. Regulation is it's so much a part of our lives, right? And I'm in the financial services industry. You're fund
Yeah.
manager with KiwiSaver, so you're having to deal with regulation all the time. Anti-money laundering laws, the FATCA, that you're financing terrorism. There's all of these sorts of rules that you deal with as consumers and as participants in the market, where you just kind of have to get used to it, right? And you trust that it's for a good reason.
Yeah.
It's so easy to complain about the extra pain that it gives you. And honestly, when it comes to a lot of the stuff that I have to do, I really wonder how this is really protecting people. I know how it's forcing me to change my business model, but I don't often see it. I just have to trust that it somehow that makes things safer so that if dangerous things were going to happen, it's probably less likely to happen with regulation. I don't know. But what's your, without getting too far into the discussion, what's your general vibe on regulation? Because for me, hardcore libertarian, I struggle. I got to be honest. Like, I deal with it. I have to just swallow it and get on with it. But what's your take on it?
Look, my take's pretty mixed, right? I think at times we can go too far on regulation, but I think if you bring it back to its core, what is financial regulation and what's it meant to do? It's really meant to protect investors. It's meant to make sure that a product does what it's meant to do, and that investors are exposed to risk around the products that they are investing in, but they're not exposed to risk around the companies that they invest with or things that they're unaware with. And I think when it comes back to that really basic point, it makes a huge amount of sense to me. I mean, the issue is that finance can be extremely complex, it can be extremely complicated, and so therefore we need to be able to guarantee that to the everyday investor, the person that we're talking to, what I say I do, what I say I'm going to sell you, and the risk that I think I'm giving, that the investor thinks that I'm giving them, is exactly what they're going to get. And to me, that's what it's all about.
Mm-hmm. Mm-hmm. It does create unintended consequences, though. You must admit, to even when you think about buying products from overseas and you consider the tariffs that are put on things or things that have to be marketed a certain way, or even this discussion, we have to say that this is not financial advice. Of course, it should be obvious, right? But it's like we have to say that, or click here to download the product disclosure statement.
Yeah.
How does that actually help people? Well, it probably doesn't most of the time. It's keeping our butts safe. Yes, these are the rules that we have to follow, but it increases the burden on the listener, the consumer, who ultimately pays the price through attention or money.
Yeah, and I think I'll get shot for saying this out loud, but I think a lot of that stuff doesn't help at all, right? Just because I say in the middle of this podcast, this is not financial advice, no one knows what that means. No one actually knows what regulated financial advice is. I give my opinion, or not me, but you give your opinions, and because you're a respectable guy, people are going to treat that as advice and take that as something to do. And I think that's why I think a lot of the rules are, look, it's rules that are set up for the sake of rules. But in my mind, when I think about financial regulation, I think about kind of 4 or 5 things that are really, really critical, and that
Mm,
we should always make sure kind of any form of financial regulation should follow. And this is kind of hard, right? Number one, and for me, it's separation of assets. So I'm a fund manager. The fact that I manage kind of 85 million dollars worth of my client's money, I shouldn't be allowed to dip into that money. So I need to make sure that my client money is always separate from kind of my business money. And I think that's a pretty fair request. And
mm,
everyone that's involved in the financial service sector should have the same thing. So separation of assets for me is something that should be there, should be everyone. The second thing is regulation should be clear about making sure that products do what they say they're going to do. If I tell someone I'm going to pay them a 9% return and it's a guaranteed return on a risk-free asset, then fuck it. It has to be a regulated, a guaranteed return on that. So, and I think this is something that we see far too often, where things are not what they say they're going to be, and that the things kind of differ. I think the people that are offering this product, I think they should be regulated for the simple reason that we are dealing with people's money, we are dealing with kind of people's savings, and unfortunately, when money's involved, a lot of bad actors get involved. And so, therefore, it needs to be clear who the people are involved. They need to go through relevant regulatory checks, background checks, etc. And then how we talk to people and what we say to people is the final piece for me, which also needs to be really tightly regulated. Because coming back to your advice piece, me telling you that it's financial advice or not financial advice, I don't think that changes a huge amount. But me sitting here saying, hey, Bitcoin is the best thing in the world because it's unregulated, it does this, 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 and I give you 6 lies, I can tell you that's not advice, but that is still not okay, because fundamentally someone will kind of, they're not going to hear the fact that this is not advice. So for me, it really comes down to, all financial advice comes down to those 4 things. Anything that sits on top of that is where it turns into fluff.
mhm,
And I think that's where the externalities and where things get a little bit harder.
mhm.
Does that make sense?
Okay. Yeah, yeah, I think so. And I think like because we're going to apply this in the crypto space shortly here, which is kind of topical at the moment. There's a lot of stuff going on with Binance. The SEC, the Securities and Exchange Commission, is trying their best, it
Yeah.
seems, to define everything as security so it falls within their jurisdiction. Um, I look at crypto, I look at that whole ecosystem, and to be honest, like I love Bitcoin. Uh,
Yeah.
the neighborhood in which it's from, I appreciate it. I wouldn't say I'm hardcore into crypto, but I do really, really get the use case for Bitcoin. And the reason why is because it really fits well with my values. It's innovative. It encourages personal responsibility. It encourages or it enables financial privacy. It's censorship resistance, allows choice. It's great for global inclusion, financial inclusion. So I love all these good things. But when you put regulation on top of that, it kind of feels like, ah, it was fun until you guys showed up. You know what I mean? So
Yeah, but
what
I
am
think
I
we've
miss?
got to be clear around what we're regulating. And this is, I guess, come back to my 4 kind of principles. Because if I'm turning around to you, Darcy, and saying, hey, look, when I buy Bitcoin or a derivative of Bitcoin, I want to be really clear that I'm getting Bitcoin. I'm not putting my money in a Bahamas-based company that's kind of pilfering from my client account every single day. I actually want that, right? I want separation of assets. I like what FTX was doing. Those guys all need to go to jail, and we need to have structures in place to make sure that that doesn't happen again. If I'd known a little bit more around the people behind FTX or the people behind some of these exchanges, maybe I would have asked a whole lot more questions. If the regulators had asked questions and got involved and understood their processes, etc., maybe they wouldn't have let it happen.
Well, let
And
me
so
stop
I
you
think,
there. Let me stop you there, though. So that's the issue, right? The regulators were involved, yet it didn't actually
with
stop the train wreck.
well, no, the regulators were involved, and the regulators in the Bahamas were involved, and the reason they went from the US to the Bahamas was to play regulatory arbitrage to make sure they found the easiest regulator that they could.
Right.
Which
So they're
actually
shopping.
brings me
They're
back
shopping.
to they shop the regulators, right?
Yeah.
And then one of the other core rules around finance is that you need to make sure the products that you are selling are appropriate for that type of investor.
Mm.
And so again, when I look at, so if you look at kind of the FTX example, it's actually a really good example. In the US, so it looks as though all customers that were trading in the US entity will get their money back. And it looks as though that one kind of like, yep, it's got tied up in the global stuff, but it looks as though the customer deposits and the customer assets are still safe and are being held properly. The problem is the US guys, they weren't allowed to sell derivatives and other kind of speculative products to US customers out of the US entity. So then what they did is they then sold to a US customer that wanted to buy derivatives. They went to FTX Global. And so a US customer that kind of traded through FTX Global didn't have any of these protections in place, which is now why they're likely to lose their money. And so to me, yep, they did have the regulator there, but it was the wrong regulator. And that was a regulator that had been chosen because it was easy. In the
Yeah.
normal world, and this is what we're starting to see right now, as we've seen the Commodities and Futures Trading Commission, CFTC, in the US, they've just taken action against Binance because effectively what they're saying is Binance have been marketing derivative products to US customers, which actually, rather than registering as a derivative provider in the US, because they're unlikely to have got permission to sell these products to US investors because they would have been seen as too risky. They've been doing it through international entities, and that's now one of the things the regulator is clamping down on. And so that's why I find it really interesting, right? All of a sudden, we're starting to see action that we probably should have seen 3 or 4 years ago, but action that kind of makes perfect sense when you put it in the context of traditional financial services regulation.
So with Binance, and I guess they're not the only one, it feels like
No,
regulation by enforcement seems to be the soup du jour. It seems like that's
yeah.
the MO of the SEC, the CFTC, and I kind of get a little bit suspicious as I do on a Tuesday because it seems to be happening roughly around the same time that there's a real war, like a hot war. There's this financial war that's happening as evidenced by the Russians being kicked out of the SWIFT system. There's this move against the US dollar, the death of the petrodollar, potentially a rise of a multipolar world with potentially another global reserve currency, maybe. Well, crypto is just another thing that could take away this financial energy from the incumbent power structure, which then brings me back to this belief that I have, rightly or wrongly, correct me if I'm wrong here, that regulation, this is obviously quite cynical, often serves the government and the incumbent. So if it serves the government and the incumbent, by definition, it doesn't necessarily mean it serves us. And I know it's meant to protect us. Yes, I get it. But here's the idea. What about just don't regulate crypto at all? Just let them lose money. And no disrespect, I've lost money as well in crypto, so it's okay for me to say this. But why not? Why not just say hands off? If you want to lose your money, go for it. You're allowed to. Why do we have to regulate it, Rupert?
I think because you've kind of stumped me there.
Good.
I think
I succeeded in stumping Rupert. Whew! How many
no,
years does it take?
no. Look, because no part of me goes, fuck, maybe you're right. But actually, the more I think about it, though, the issue is no matter how much people say they understand that, no matter how much people go, yep, that's fine, that's fine, that's fine. At the end of the day, people still need protecting, and I think you will end up with, I mean, particularly you look at what's happening at the moment, right, where volumes are kind of going sky high again in the crypto world because you've got prices that have gone sky high as well. And unfortunately, that means that's the less sophisticated investors that are getting on board. You've got investors putting lots and lots and lots of money in. And fundamentally, we need to make sure, as the regulator's job is to make sure that people are getting what they expect they're going to get. People are not buying, not thinking they're putting their money into a deposit account so they can invest it into crypto simply to fund a business. My view is actually we still need those protections in place. And actually, as a big proponent of crypto, my hope is that if we can make it safe and investable for everyone, no matter what your level of sophistication is, then that's how we get mass adoption of these products. That's how we actually take it to the next level, right? The
Yeah.
problem is if we keep it unregulated, it will always stay on the fringe,
Yeah.
because people need to be confident that they're going to get what they get back.
Yeah.
And I think addressing that first point, regulation helps governments, regulation helps the incumbents. I think for a lot of regulation, I think it does. I would tend to agree with you. I think though, if you keep it at the first or even the second derivative regulation, so if you just keep it at the basic core principles, then I don't think it does, right? I think that's the trick, is figuring out, and no regulator has figured out how to do this. How do you keep it simple? Unfortunately, regulators across the world over the last 10 years have said, we don't want to have anything to do with crypto. And therefore, that's why they've stayed well away from it, because their jobs are immeasurably easier if they keep crypto as an unregulated product. The FTX downfall clearly actually just showed that was never going to work, right?
Mm.
And so way too many Americans in particular got caught up in that. You had
Mm.
the hearings, you had everything else, and that's why they can't afford to ignore it, which is, I think, why we're starting to see this massive crackdown over the last 6 months, for the fact that Congress kind of were pretty tight with FTX, with Sam Bankman-Fried. People liked him. People thought that he was the responsible entity, and yet he managed to pull the wool over everyone's eyes, including the politicians. That, to me, is why we're now seeing this massive crackdown, because fundamentally the industry, unfortunately, has proven that it is unable to self-regulate.
Yeah, and I would say that it's part of I'd go so far as to say it's a cultural issue as well. Not
Yeah,
just specific pockets of culture, but it's kind of where we're at in the world right now, where we've been operating in a model of management of the status quo rather than leadership of
yeah.
what comes next. And so naturally, of course, the regulators aren't going to be the first one to stick up their hand and say, I know how this should work. Let's try this. They're going to be managing it, and they're going to try and make everything conform into their system, right? Whereas what I think we need with this oil and water thing with TradFi and DeFi especially is you got to shake it up to emulsify it, right? But you're not actually going to get it to play well together, I think, every time, especially if you have a culture of management where you're just trying to make everything fit within your definition so it falls within
Oh,
your jurisdiction. You know what I mean?
but I think actually the oil and water, like I think there's a bit of a mixed ground, right? Because I think you can actually delineate crypto into kind of 3 or 4 different areas, right? At the start, you have what I would class as tokens, and tokens that are offering, and ICOs, initial coin offerings. I think I can definitely see an argument as to why that world can stay in the unregulated environment, because fundamentally what people are doing on the blockchain with the projects, with where all of that world is going, I do think by kind of putting people in a regulatory straitjacket there, that's going to make life really, really hard, right? In saying that, we should have the ability, if we find out someone has just lied, that we can go after them. And to be fair, that does happen at the moment, right? Where a lot of the fraud stuff people get done for fraud if they're. But I think in my view, what we've done though is we've kind of said this whole world of crypto is different. Whereas actually what we've kind of done is gone and created a whole lot of financial products that use crypto as the underlying base, and use crypto as kind of the underlying, what's the word I want to use? The underlying asset on top of which these crypto products have been built, right?
Mm.
And so to me, that means, hey, look, you're trading on an exchange. The process of buying and selling these products, that shouldn't be any different to any other exchange, right? I'm not talking
Mm.
about how we regulate the exchange. I'm not talking about how we regulate the crypto. I'm talking about how we regulate the buying and selling. I'm
Yeah.
talking about the fact that when we offer derivatives on these products, so whether it be Celsius, where they're offering you a big return and saying we'll give you 13% or 20% returns, or staking, or any of those, that's not actually crypto and the crypto projects that are being impacted here. To me, that is simply a promise of a return, something happening in the future, which is no different to a standard financial product. When we're talking derivatives, where we're kind of going, it's 100 times levered Bitcoin product, or a 50 times levered Bitcoin product. Again, none of this is new. None of this is original. You can already do
Yeah.
it on commodities. You can do it on currencies. You can do it on shares. You can do it on any other thing that exists.
Yeah.
But if you're in any other kind of any other asset class, it's classed as a financial product. But for some reason, the crypto world has said, no, because it's based on crypto, it's not a financial product, therefore it's not.
Sure.
And so that's,
Okay.
I guess, all I'm trying to say here is saying, let's make sure we separate what is crypto and what is the financial ecosystem that sits on top of crypto. Let's regulate the financial ecosystem
Yeah.
and let's not regulate crypto.
Hey everyone, just a quick message around kōura KiwiSaver. Want a little freedom and want a little choice with your KiwiSaver without going overboard? Then check out kōura. Let their digital advice tool help build you your own personal KiwiSaver fund using 9 individual funds. Or, my favorite part, get some advice and get it set up through financial advisors too. You can choose traditional with their core funds, or maybe consider bolting on their clean energy, property, or even their carbon neutral crypto specialty fund. To learn more about kōura KiwiSaver, the costs and risks involved, check it all out in the product disclosure statement or visit www.kōurawealth.co.nz for more. Now, let's get back to the show. Maybe what we could do is just explain and I've got it written down here, so it's not like I'm that smart, but I just want to read out some of the core ingredients. There's 4 principles. There's this thing called the Howey test,
Yeah,
and the SEC, the U.S. Securities and Exchange Commission, to kind of bring it within their fold, they would apply this test, the Howey test, which has 4 things. So it's got to involve the investment of money, a common enterprise, expectation of profits, and profits derived from the efforts of others. So what you were saying before, let's just take Bitcoin as an example, where Bitcoin in and of itself should really be a commodity. It's kind of like it is what it is. But
yeah,
say a futures contract off that, which is 100x leverage
exactly.
product, then that's what you're saying is a different story, and that makes
Or,
sense as
or
well.
a staking product, or staking, right? Not even a leverage. Leverage is the ultimate example, but the
Yeah.
staking, right, where I sit in there going, you lend me your Bitcoin and I'll give you 10% return on it.
Well, that's where, yeah, and that's where I guess I wonder if it fails on number 4 of this Howey test, where it says the profits have to be derived from the efforts of others. The efforts of others specifically refer to a promoter or a third party. Now, let's
Yep.
say if it was a perfectly, and I'm not suggesting that with the Ethereum network, I know enough about how that works going forward. I'm still digging into that myself, but if it was completely decentralized and it was just a protocol that you were following, there was no promoter or a third party, then it doesn't really meet the definition of the Howey test on that 4th point. What are your thoughts
Can
on that?
no, yeah, okay, I'll debate that one. I think there's
Okay.
a couple of different things, right? I think one is most of the staking products that we saw last year and most of those lending products, they were based on the fact that people thought that they would be able to invest those products and earn a better return. So that's where, to me, the third party was a pretty clear definition of a yes.
Totally.
Ethereum, I think, is another really interesting one, right? Because I get your point that it's just by virtue of the fact that we're burning ether with through the latest protocols. But my argument again would be, and I think this is where ChatGPT and AI and where we're coming into this new world, I think we're going to have to start to take the view that actually a computer is basically what we're going to class as that by the efforts of others, right? Because
Sure.
if I
Right.
were to turn and go, I could run under that same example, right? I could launch an investment fund. I could run buying and selling shares, 100% following a quantitative model where I've set up my computer program and it'll buy this, it'll sell this, it'll do 100%. I don't intend to ever to go touch it in 12 months' time. Are we saying that's not a financial product because I don't touch it? But my computer is, and the computer program that I've written is doing it. And that's where I'd argue you have the equivalent in Ethereum, where it's a computer wrote program that has been written by people that are actually doing this stuff, which is kind of where it's going. So not
Okay.
direct, but yeah, I do think people are involved there. And
Yeah.
I think otherwise you expand the definition of people to also include computers.
Yeah. Yeah. Well, either way, like I guess there has to be a boundary line drawn
Yeah,
somewhere,
yeah.
and it's kind of arbitrarily sometimes. Maybe they just pick a certain point, right? I don't know, but Let me just, you mentioned AI before, and I just, whenever I need to go to sleep, I think about artificial intelligence and crypto because that just completely blows my mind to the point where I just pass out, right? Like it's just
Yeah,
so phenomenal what could happen with these two exponential technologies converging, and what could that do for the world. I then kind of step back in the context of this discussion around regulation, and I think there is no way any regulator could ever keep up with where we're going next. What do you think of that? Like, is it
100%
possible
agree with
that,
you.
that we could keep up?
No,
And
and they won't, right? And so, I mean, it's coming across that I'm a big defender of regulation, particularly with what I'm about to say, but it's not the case. But I think that, and that is one of the reasons why regulators are so nervous about saying things like, yep, that works, that works, that works. And so that's why we often move into this world of regulation by enforcement rather than giving people permission first. Because I think even regulators acknowledge that they can't keep up. Regulators acknowledge that they don't understand a lot of the stuff. And so that's why, to keep things moving and keep things fast, one of the answers they give is, "Hey, look, you've taken the legal advice, you've done everything that you can. If you're comfortable with it, then go ahead. And then when we get the time, or we kind of find the time to fully get our heads around it, yeah, we might come knocking, we might not." And so that's why we do see this regulation by enforcement, because people go live, people get the friendly lawyer that's going to tell them what they want to hear. But if we had to wait to the regulator tick everything off in advance, there's just no way that would ever happen. And so I think this is a really good one of, we can't have our cake and eat it too.
mm,
We want the market to determine what the market wants. We want the market to kind of go forth. But the downside to that is people are going to get surprised afterwards. And I hate to say this, but I don't have such a big issue with it, because I'd rather that we get products in market, we have people being brave, we have people trying stuff, rather than waiting to get the regulator to try on the way through. The one thing I would like to see from regulators, though, is, look, if all of the appropriate processes have been followed, and if the kind of, it's just a slight differential view on definitions, then we start to see some leniency from regulators on others. But
right.
yeah,
So
it is
principles based approach rather
a
than,
yeah, a principles based, because, and that's where they all are. But it's kind of sitting there going, if, say, for example, I launch a financial product, say I launch the Celsius product, I think it's actually a really good one, right? Where I sit there and go, part of me says, hey, look, they tried to engage with the SEC in the US. They tried to do quite a lot of stuff with them at the start. SEC said, nah, 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 not interested, not interested, not interested. Don't want to go anywhere near it.
yeah.
And I kind of go, to me, that shows intent. That shows they weren't necessarily desperately trying to flout the rules. And I would hope that they got credit for that when they did get up. The fact that they got a $30 million fine probably says to me, no, they didn't get any credit for it, which I think is the disappointing side of it. They did try their best to engage and get what they needed to get to first.
Yeah, and ultimately, I guess that's so. What you're kind of saying is that this regulation by enforcement is a necessary evil
Yeah,
to, for regulators, because it's just not practical to wait until we get everything ticked off the list from a regulator who still is trying to figure out what Bitcoin is. Like they're,
hard out.
understandably, things are moving so fast they can't keep up. So yeah, we just have to almost let participants kind of go forth and make a mistake and then get, penalized for it. But ultimately, I guess at a micro level, when it comes to the individual who's trying to innovate, that's where it gets harder because they don't have the capacity to withstand the slap on the wrist so much as the bigger player, right?
Exactly, and then that's what's so hard about a lot of it, right? But it also shows, and I'd argue, look, even in New Zealand at the moment, one of the issues that we have with the banks dominating the KiwiSaver and investment market so much is banks are always very safe entities. They're going to take the easy option every time. They've got so many other regulatory problems at the moment that there is no way they want to go anywhere near any problems on this stuff as well. And so as a market, we do need people taking risks. As a market, we do need people kind of trying to build new products, do things differently. And as you say, it's often the smaller people that will do that, and the people that can't afford to fight the regulator when they do come knocking, which is what makes it really, really hard. But so it kind of on one hand, which I guess is to your point where you come from, where regulation helps incumbents, because having a straitjacket set of rules does make it a lot easier for those guys that are too scared or don't need to innovate.
Yeah. But I think it's an opportunity. And that's why it's like,
Massive opportunity.
it's so cool, right? Like, I know it's scary, and there's a lot of places where it feels like everything's being clamped down and restricted and battled. But underneath all this, I see phenomenal opportunity, right?
And look, imagine if we, if when the narrative changes, right, and we sit there and go, whenever you hear anything about cryptocurrencies, it's not this massive health warning of you're probably going to die and lose all your money by investing in it, because all of a sudden we've got the structures, we've got the processes in place that make it safe. And it's not just safe for people like you and me who understand what we're doing and know what to do, but it's actually safe for the man on the street that sits there and goes, I want to give Bitcoin a go from there. I just think that's where we want, that's what we want regulation to do for us. And that's the big upside, right? Is it makes this industry far more accessible to everyone.
Cool. Well, I think it's totally appropriate to say, hey, none of what we discussed today is financial advice. What else could we disclaim away? These are opinions only. Please don't look at us as anarchists and come after us.
Or experts.
Or experts. Do your own due diligence.
This is the stuff that I hate about the regulation, though, right? The fact that our lawyers tell us that just by saying that, somehow we've made ourselves safer. That makes no sense.
No.
We'll just leave it at that, shall we?
Yeah, I think so. That's good. Hey, thanks everybody for watching. By the way, if you want to ask a question, probably the easiest thing to do is just drop a comment. Drop a comment wherever you're listening to us on. If it is on the audio podcast, there's a little link that says "Ask Me Anything." Just jump in there, ask a question. We'll do our best to cover it. And if you're watching on LinkedIn, Facebook, whatever, just put a comment in. We always read them and seldom respond, but we promise to respond in the future. So thanks again. Thanks again, Rupert. It's always a good chat. It was awesome. Thanks very much. Cheers.
Thank you.